Right. In this one, I think we did up to the income statement. We didn't do part B and C, did we?
Actually, cost of sales is 7,500.
Cost of sales 7,500. It's given in the additional.
Which question are you on?
3.
That makes sense. Okay. No, we finish this.
Yeah. Okay, shall I help you with the part B and C, guys?
I just have a question.
Yeah.
Why is other revenues down at the bottom and not at the top?
Other revenues basically coming just before other expenses.
Is there a reason why it's not up with the other revenues?
Yes, because it is not relating to the direct revenue or the trading revenue. Right? So it's a kind of like supporting revenue, ancillary, yes, supportive revenue. That's why we write separately. So up to the adjusted gross profit, it is all trading profit. Yeah?
But in like SACs and exams, like do we have to mention other revenues, other expenses? Do you have to write the title?
Yes, of course, my dear. Yep, exactly the same format. Yeah, right.
Oh, well, like the plus and minus as well.
Yes. Otherwise, I mean, alternatively, if you don't like to write, plus minus signs, you can put plus or add, and for subtractions, you can say less, right? Okay. But you make sure you are not putting the brackets here, okay? Yeah. We don't put brackets like as we did in cash flow statement. Right. Then we have to do part B, yes. Oh, good. Everyone is okay? Yeah. Right. Explain why payments to accounts payable is not reported as an expense in the income statement. Why is that, guys?
Because it was already recorded as an expense when the revenue was recorded at the transaction.
So that means when we purchase inventory, did we record it as an expense? No. Purchasing inventory from accounts payable, was it an expense? No. Any other answers? Yeah, question is part B.
Because it doesn't increase assets and decrease.
Yeah, so you have to be specific. So it doesn't increase, yes?
It doesn't fit the description of an expense.
Yes. Why? Because it doesn't decrease the
Assets or increase liabilities.
yeah, and doesn't increase or decrease, Varun. Yeah, honest equity increase or decrease.
It doesn't affect it.
Yes, it doesn't affect it. It doesn't
It
decrease.
affect the liability because it creates accounts payable, which is
Yeah, it decreases liability, but it doesn't affect the what is it? Honest equity. Yeah. Because at the same time, if you are thinking about the liabilities and liabilities, also asset also decreases, right? So remember the asset definition. What is it? Liabilities definition. What is it? It either not liability. Expenses definition. It either decreases asset or increase liability, yes? So then this case, see, it decreases both assets and liabilities, yes? That means definitely it doesn't fit the definition.
Wait, which asset?
Cash.
Yeah.
Cash at bank. Right. Shall we write it? Please take down part B.
Wait, an asset, an expense decreases assets or owner's equity, right?
Okay, it's like this. It either decreases asset or increases liability. That decrease owner's equity.
Yeah.
Can you just say that payments to accounts payable is not an expense as it decreases liability but does not sorry. Payments to accounts payable is not an expense as it decreases the asset but does not affect the equity. Can you just write it like that?
It decreases, no, because the thing is, to be an expense, Harish, like, it should either decrease asset or increase liability. But in this case, it decreases asset, but look at the other condition. It decreases liabilities as well. Make sense?
Yeah.
And also, it doesn't affect the owner's equity as well. Because the condition is, first condition is what? First condition itself is not meeting. Why? it should either decrease asset or increase liability. But in this case, it decreases asset, but also it decreases the liability as well. Does that make sense?
Decreases the asset because cash at bank decreases in the
Yeah,
accounts payable.
and also it decreases the liability.
Yeah. So can you just say that
So it is, you know,
you say payments to accounts payable is not an expense as it decreases assets but also decreases liability, which is
yeah. So which is not fit in the
description.
No.
Or
fit in the, yeah. So the definition. Okay, part C, guys. Discuss the ethical considerations involved in the owner's decision to report the bad debt. Right? Now, what is it, guys? What has happened here? Did we discuss about it? Yes, we discussed, yes, last time. Right, we discussed about this one last time, didn't we? Right? Sash, you want to come forward? Yeah. So basically, what has happened, guys? This man, yes, Randy Fast, became a bad debt, right? Then what happens? Now, also owner has received the formal notification of the bankruptcy, but has read in the newspaper that the customer has fled the country. Okay, so then, is it enough evidence to determine that or to decide that this particular debt is a bad debt? Yes. Yeah. So then we can write it off as bad debt. Now what is it? Discuss the ethical considerations involved in the owner's decision. Right? Remember, guys, when I gave you the note for answering ethical questions, I gave you the note, yeah? I gave you the note, yeah? Yeah. So then remember I told you the second last one I gave you. Right? What did I say? You want me to show it?
make sure that the requirements are clear.
Ah, very good. Yeah, he remembers that one. That's here. Right? Make sure that the requirements of the theoretical aspects in terms of accounting assumptions, characteristics and elements are met, yes? Yep. So then basically we need to make sure that the theoretical aspects have been met, yes? Right. Okay guys, we'll write the answer. It's a discussion question though, but not much to discuss. Okay, guys, done? Right. Please have a look at the next part D. Explain 2 reasons why business made a net loss yet generated a net increase in cash for August 25. That, of course, I can help you. I can guide you. So, go through the cash flow statement. What has happened, guys? Cash flow statement, net increase. Yes, there is a cash surplus, meaning we have received more money during the period than we have paid. Yes, right? However, what has happened to the profit? It's actually a loss. Yes, no profit. Now you have to find the answers or reasons why it has happened, right? Figure it out, Gaurav. Look at the question and see what has happened. Sash, I think you don't have those notes, yes?
No.
Yeah, I'll print them. Yeah. You said that tube 8 wasn't there, yes?
Yeah,
Tube 8, there are 2 parts, A and B. Which ones you don't have? You have to tell me.
I have any.
None of them?
No.
Okay. This one has 900. Any thoughts?
The capital.
Capital contribution? Right. Yes, that's a capital contribution. And at this level, you are correct. Also, next time, guys, you have to compare it with the drawings also. Why? Capital contribution and the drawings, cash drawing, both of them are owner's impacts. Yes. So in VC level, but this level, that's fine. You need to make sure you compare. But however, still it is your correct. Yes.
You also have to say that because cash and profit are not the same thing. You have to
No, this one is asking only reasons, Elston. Yes.
Because in school, in our school, that's what they said.
2 reasons why. No, in this case, no. Don't worry about it. It's just 2 reasons. If you are going to, that depends on the marks as well. Because if you are, how did your school ask you to explain? Like, is it?
They said state that the reason is because cash and profit are not the same. Then explain what the difference is, and then provide the examples.
Yeah, because I'm asking how much or up to what extent your teacher wants you to explain. Like, is it a big explanation or a brief?
Just explanation that just is just a brief explanation that just.
Yeah, because if we are going to explain that one, right? That's a good point. If you are going to explain that one, we have to explain that cash and we have to say that cash and profit are not the same thing. Due to how many reasons? So if you are just briefly explaining, you have to say cash and profit are two different concepts, right? That's the, most brief, whatever, shortest explanation.
Yeah.
If we go beyond that, you have to tell the reasons. How many reasons are there? Anybody knows? What are the why do we say that cash and profit are not the same thing? How many reasons are there mainly?
I don't know how many reasons.
Okay.
But like, it's because like there's like credit stuff.
Is it 2?
2? Okay. Yes?
Probably 4.
Actually 3.
Ah.
Right? Why? What are the 3? There are some cash items that are not
Credit.
revenues or expenses.
Oh yeah, I remember this one.
Yeah? Then have done it, yeah? So there are some profit items, revenues and expenses both, that are not cash. And also the third reason is there are some items that affect both of them, right? But by differing amounts. What are those? There are only 2 of them. Right?
Accounts receivable.
Account, yes, receipts from accounts receivable and
Payments to accounts payable.
no. Receipts from accounts receivable and what? What is the corresponding entry for that in the income statement?
Cash.
Credit sales?
Credit sales, yes. Similarly, payments to accounts payable and or payments to purchase of inventory in cash, compare with the what? Cost of sales. Now, Alston, now see that's what I said. If your teacher says that, up to which extent, you have to ask next time, which extent did your teacher give you a sample answer or not?
We're just told to say because cash is the actual amount that's used that can increase and decrease with purchases, but profit is just from revenues minus expenses.
That part.
Yeah.
Okay, that's not the answer. That term basically we are explaining cash and profit, but that's not the difference. The difference is those 3. Yeah, those 3. What are those 3? But as I said,
You can have.
yes, cash items that don't affect the profit items that don't affect the cash. Both there are some common items that affect both by different amounts. That's the answer. If you are going to distinguish them, right? So I don't know what the teacher expected, but basically that's how if you are going to explain. So teacher asks you to explain the profit and cash. That's it. Yes. All right. Okay, guys. Then what are the reasons? Yeah, what one said, capital contribution. What else? Yeah. Look at the question and tell me.
Computer equipment.
Computer equipment. Yes. Yes. Would it affect it? Yes. So now what has happened, Aston?
Oh, because it's an increase in
So it's not. It's the opposite. What else?
receipts from accounts receivable.
So that you can't just say that one. You have to. What did I say? What did I say? Just mention. Yes.
Is it like cost of sales is an expense on the income statement, but receipts from accounts payable is
No, cost of sales we don't compare with the receipts from accounts receivable. What is it? What did I say?
Receipts from accounts receivable is 4,400. Credit sales is
it's higher than
4,200.
payments to accounts payable.
Yes, correct. Cost of sales and accounts payable should be compared. Yes. What is it?
Credit sales and receipts from accounts.
Credit sales and receipts from accounts receivable. How much is credit sales?
4,200.
4,400.
4,200.
For 200 and this is from accounts receivable. That's correct. Why is that? Because how much is the credit sales, guys? 4,200. Yes. So basically that has affected the profit to increase by 4,200. Why? It's a revenue. On the other hand, receipts from accounts receivable 4,400. $200 extra, yes, which means there is a net impact on the cash by $200. Then he's correct. That's another reason. You want to compare those two? Payments to accounts payable and
Cost of sales.
cost of sales. Yeah, tell me.
Cost of sales is like 7,500.
Yes.
and the accounts payables and
Yes. So is it a reason? Yes. Why? Because how much did you say? 7,500. That means what is the difference, guys? The gap. 5,000. Yes. So expenses have increased by 5,000. That has impacted or that has contributed to a loss. Yes. But the impact of the cost of sales in the cash flow statement is only 2,100. Yep. Okay. So 3 reasons. What else?
I didn't get the third one.
Sorry?
I didn't understand the third one.
Third one?
Yeah.
Okay. Third one is Punara. Anybody who didn't understand that? Third one, last one? Yeah? You didn't understand as well? Okay, let me explain it. Okay. Now, go to the cash flow statement. Right. How much is the impact on how much is the payments to accounts payable, guys? 2,500, yes? So, our cash decrease because of accounts payable, how much? 2,500, which is this one. 2,500. Then, what is the corresponding entry for that one in the income statement? Cost of sales, yes? Why? Because we are purchasing inventory from our accounts payable on credit, and that and such inventory is converted to sales, yes? So when we make them, say when we sell them, then the part of the inventory that we sold become a cost of sales, yes? Now do you get the combination or the relationship between the accounts payable and cost of sales? Yep. Right. Then guys, similar to the same, the receipts from accounts payable and credit sales, yes? Same thing. Right. Then what is the impact on the income statement because of the accounts payable? 7,500. So our profit, our expense increased by 7,500. But because of the same or similar or corresponding entry in the cash flow statement, it decreased only 2,500 payments, right? So what is the gap, guys? What is the difference? So income statement is basically behind by how much? 5,000. Got the point? So cost of sales and expense increase because of the accounts payable 7,500, but that of cash flow statement is only 2,500. So 5,000 gap. So because of accounts payable, our net profit has dropped 5,000 additionally. So that contributed to a loss. Is it clear or still not there? Yeah, make sense? Doesn't make sense? No? Still no? No?
Kind of, yeah.
Kind of? Okay. Yeah, still if you don't understand, tell me, I can help. Right? So I will, if I tell you further, okay, now I'm going to cross this 7,500. What will happen to our profit, guys? This one, there will be plus 7,500, yes? Make sense? So it will create a positive amount, yes? Yep. Basically how much? 6,740. Now this will be a net profit. Yep. 6,740. Yep. And what will happen to the cash flow statement, guys? Now we are adding back 2,500. Imagine that we didn't have accounts payable, yes? Assuming we didn't have accounts payable, then we are going to add 2,500 here. So then what would have been the net increase in the cash flow? So basically 7,250, yes? So this net increase would have been 7,250, right? Right. Now see, you got the point? So if we didn't have that one, our net cash position or our we call surplus. So the surplus would have been 7,250. But this one, that's basically increase of 2,500 only. But this one, it increased by 7,500. the net profit. I mean the impact on the net profit, right? Increase 7,500. So that net loss became a profit. If we didn't have that item cost of sales and accounts payable, the factor. Yep. So then again, let's say we are going to put that factor back, right? Then what will happen? Then this 2,500 will be gone. We will have 4,750. So it decreases by 2,500. But in this one, even further, yes, this one will further drop 7,500 from 6,740. What will happen? It will be making a net loss. See, so it increased the impact basically by 5,000. If you understand, right, this one, receipts from accounts receivable and the credit sales, exactly opposite. Clear? Right. Okay. Any other answers, guys? Discount? What? Discount what?
Expense.
Discount expense? You sure?
Discount revenue.
Because discount expense, Harish, let's say I assume I don't know the amount, whichever the amount. Let's say it is $100. Discount, if the discount expense was $100, what would have happened? Our receipts from accounts receivable will increase by 100. Why? Because we didn't give the discount. Yeah, this will be how much? 4,500. What will happen?
Wait, why is it increasing accounts receivable and not
Why?
increasing
Because-
accounts payable?
No, he's talking about discount expense.
Oh,
Yeah. So then, our accounts receivable will increase by $100. Yes, right? Then, what will happen to the income statement? We don't have the discount expense. Right? This discount expense is not there then. Yeah? So that means expense decreases. Means what happens? Net profit increases by the same amount. That means no impact. Overall impact is 0. Make sense?
Yeah.
Anything else? I think that's it, yes? Basically, that's it. No, I can say another one. No, there's another one. What is it? How much is GST received, guys? Right, 500. How much is the GST paid? 160, yes. Then, basically it is, yes, 340, there is a net impact. Right. Yeah, shall we write it? They are asking only 2.
with the payments to accounts payable and the cost of sales, so the payments to accounts payable was 2,500 and the cost of sales was 7,500. Does that mean like 2,500 was part of the 7,500, but then another 5,000 was like, no, wait, where does the 5,000?
Yes.
Where does the 5,000 come from?
Yeah, 5,000 is coming from probably the business didn't pay the other 5,000. Right? Now look at the accounts payable. How much was the accounts payable? Now we had to find it, yeah?
2,500.
Accounts payable, we had to find it, right? So basically, what has happened is we purchased, right? Again, we can't see the purchases as well. Can I see the purchases? No. Purchase of inventory. Yes. Now see, purchase of inventory was how much? 8,700. So that means during the period we purchased inventory worth of 8,700. But how much did we really settle? 2,500. We didn't settle the rest. Then in that 5,000 you are talking about is in there, in that 8,700. So because we didn't pay it in cash, because still we have time, probably we have more time to pay it with the credit terms, right? So we can settle it next time. So because we didn't settle everything, so then we have the that gap 5,000 is there. Make sense? Right. Any other questions, guys? Okay, please start part which is E. Calculate the accounts receivable, payable, and GST. After that, we are going to do the balance sheet. If you are lost on the formula of the accounts receivable, payable, etc., let me know. I will put the formula on the board. I want you to try. You okay, Sash? Yeah. If you have any questions, tell me. They just write the details. That's the little. Okay, guys. You two as well. Get used to write the what details. Right? Opening balance, start with opening balance, then add trade sales plus GST like that.
Is there accounts receivable for
The IDC is not 200. How much?
Is it
How much?
20?
With the information. Huh?
But you have to include the bad debt for the accounts receivable.
Others? So you have to, whatever the
Yeah.
transactions that increase or decrease. Yeah?
And the sales return?
Yes, sales returns. Whatever the transactions that increase or decrease the amount of account receivable should be included, yeah? Sales, sales returns, receipts, yep.
Yeah.
That's a hand with it.
Oh. Making it up.
Is that it?
Making it up.
You guys start school, yes?
Oh, we start tomorrow.
So today?
We start tomorrow.
Tomorrow. You didn't have the economics, huh? Now said you have the same.
I didn't do it.
I think most of you are done with the accounts receivable, yes? I'll get going with the accounts receivable, guys. I got 17,930, guys. What did you get? Same thing?
17.9.
Yeah? Alright.
And which two did we do when we had the formula for GST payable?
GST I gave you last week. Remember? This is the one. Yeah, if you want, take a photo.
That was good. No, I have it written down. I just didn't know which two we did.
Yep. I think I gave you last week, yeah? This one? Right. Okay, guys, done with the accounts receivable, payable? Yep. Shall I start the accounts payable? $7,580 is correct. Is that correct? 7,580? Okay.
Wait, what is it? What is it? 7580.
Okay, I think, guys, accounts receivable and payable, you should be fine, yes? GST is the one that is little bit challenging and confusing, yes? And it has a lot of information, yeah? Shall we do it together? I'm happy to do it together, right? Or you guys want to try it? I can see some of you have already done, yeah? Shall I start it? Okay, how would you do, guys, the GST? All right, I'll start. GST, is it a liability or a GST asset? Liability, yes. GST payable 390, yep. GST payable, you can start as GST, what is it, liability or payable, whatever. I would say GST payable, right? Or liability, same thing. Liability at start is how much? 390, as I remember. 390, yep. Right, 390. Then we'll start the first information that we have is the cash flow. So we'll go through the cash flow, guys. GST received 500, GST paid 160, right? And GST settlement 390. So which ones are we going to or which transactions that will increase the GST liability, guys? Yes, GST. Tell me. GST received, yeah. GST received, right? 500. And both the other ones that were in the cash flow statement are going to reduce the GST liability. Yes. Second one is how much? GST paid. So GST received, both of them are in cash, yes? Received in cash,
So which one
paid
is
in
the
cash.
receivable balance?
Receivable balance is at the beginning of the balance sheet, at the opening balance sheet. This one.
Isn't that GST payable, not receivable?
Yeah, that's what I said, GST payable.
Okay, so you don't need to just
Yeah, you will say GST payable or GST
receive it, so it's one of the.
one or the other, yep. Yeah. Yeah, if you are following the formula I gave you, it's one or the other, right? So, see, what I have recorded in green is one or the other, right? Right. So you won't have GST settlement and refund at the same time. Also GST payable and receivable, you won't have it at the same time. Okay? So same thing here. Right. Next one, guys. GST paid is how much? 160. And then also there is a GST what? Settlement. How much is it? 390. That should tally with the opening one, yes? What we had at the beginning is what we are settling. Yep. Everybody is okay with that. Right. Then now I've basically went through all the information about the GST in the cash flow statement. Okay. Now cash flow statement is done, guys. Now I'm going to go to the additional information. Right. Now we'll basically ambush for GST in the transactions. Yep. So credit sales. Does it have GST? Yes, 420. Increase or decrease GST liability? Increase 420, yes. Right. So then GST liability you are increasing. So plus GST receivable on credit sales. 420 up. Then next one, guys. Sales returns 330 including GST. So what will happen to the GST?
Decrease.
Decrease. Why is it, Krishan?
Because it's a return.
Return. Why? Now you guys can think. See, when we make the credit sales, the very first one, our GST liability increase. Why? Because our customers are going to pay us with GST. So that will increase our GST liability. And also when the return happens, which is the sales return, reversing thing happens. Yeah, sales return. That means we are not liable for that GST inclusive in the sales return, which is 30. Yes. So then we will subtract 30. Right? Is it clear, Sash? So take away GST on sales returns. Yep. 30. Similarly, guys, what is the other one? Credit purchases. So what is going to happen? GST 870. What will happen? Plus minus GST liability plus decrease. Only you are saying plus. Why is it decreasing, guys? Because you are going to pay for it in the future, Punar. Okay, so that what will happen? GST liability will decrease. Yes, 870. Yep. So you are going to pay. Yes. So then you are subtracting GST on credit purchases. Yep. Which is 870. Right? Okay. Next one, guys. The opposite, purchase return. That means $10 only. $10 will be, what do? You add it back. Yes. Because when you purchase, if it decrease, when you return it, so our GST will increase. Yes. $10 only. Right. Next one. Cost of sales, no GST. Inventory, no GST. No discount, no GST. Then the only thing is 220. But it doesn't talk about the GST, guys. 220 accounts receivable. Ran fast. He ran along with the GST. So that means what happens? Right? We can't follow him to get the $20 GST. So what happens, guys? Minus. Right? So our GST liability decreases. Yep. So then, so minus GST on bad debts. Bad debts written off. 20.
And what about GST received on credit fees?
We did put it.
Oh, okay.
Credit sales for 20. Yep. Okay, guys. Now it's a matter of simplifying them. So we'll do what is it? GST payable at the end. Anybody calculated it, guys?
Negative 150.
Negative 150. That means if it is negative 150, what do you call it, guys? Not payable. It's going to be receivable. Very good. You guys are knowledgeable about it. Receivable. Yep. So remember what I gave you in the formula. Let's see. I haven't given it in the formula. Sorry. No, I have given. If this balance is negative, see, I have given. Yeah. Then it becomes GST receivable. That is a current asset. Okay. So I have given it, guys. Right. GST receivable negative 150. So which is a current liability. Current asset, yeah, not liability. Why do we get a negative, guys? Because we have overpaid GST than what we have received in this period. So that means we can claim it back. Right. Any questions? No?
So GST receivable at the end is just 150,
150.
not negative.
No, I mean, no. Okay, that's a good point. So the overall balance is negative 150, which we will say as we will say GST receivable. GST receivable is positive, right? So I don't know if you are going to get confused with that in the future. No, you okay? Yeah, yeah. Just follow my formula, what I have given you.
Write balance at the end, or do you have to write GST receivable at the end?
Yeah, GST receivable. Because we don't call GST balance Puna.
Okay.
Yeah? Either you'll say in your unit 1, 2, you'll call either GST payable or receivable or GST liability. Yeah. But if you are going to call it GST liability, opposite is GST payable will become GST receivable. Right? But in the unit 3, 4, don't worry, because we will call like everything common, we call GST clearing. Okay, so then you guys won't have any problem in 3, 4. Okay, guys, now we are done with this. Yeah, shall we start the balance sheet? Yeah. Right. Now, how do we start with the balance sheet, guys?
The name.
Name. Okay. What is the approach? We'll start from the opening balance sheet.
Cash at bank first.
Yes, cash at bank first. Correct. Right? We'll start with that. Okay, now in this case, bank is a negative one, guys. So then we'll see this one. What is the bank balance here? Yeah, go. Yes? 2750, yes. Which is a current asset. So let's write it, guys. Current assets, we'll start with bank 2750. Right? Then we can write what is it? Accounts receivable. Good. Accounts receivable 17,580. How much is it? 17,930. Right? Then
GST
Yeah, GST receivable, which is 150. Next one.
Inventory.
Very good, thank you. Inventory. How much is inventory, Sash? Where do we find it? Go to this one, see? Physical inventory count, 3900, okay? Physical one is the one we take. Inventory. Why do we guys take the physical inventory, not the inventory according to the inventory card?
Because the inventory is more accurate.
More accurate, yeah, more reliable, because that's the one we can sense it. Yes, we can see. Of course, we can verify that it is there, right? Okay. Then basically, guys, that's it. Accounts receivable, current assets. Then we'll do the non-current assets. Yep. Now basically, we have to follow the opening balance sheet. That's it. We have shop fittings. How much? 500. But make sure we have any other purchases in the cash flow statement. Yes, there's a computer, right? 1600. Yes. So then we'll write it, guys. Shop fittings. Sometimes be careful. We might have sold some non-current assets that we can come across in the cash flow statement. Yes. Shop fittings 500. Then computer. Can we just write computer? No. We have to write the exact same phrase given by the question. Unfortunately, we can't give our own names. Yep. Right. Be careful with that. So basically, guys, that's it. Then, hold on. I think there's a problem. I think there's a typo, guys. Hold on. Yeah. What is the typo? Shop fitting should be not 500. 5,000. Please fix it. 5,000. Maybe typing, the something wrong. Typo. Please fix it, guys. Shop fittings 5,000. Punara, there's a typo. Please fix it. Opening balance sheet. Make it shop fittings 5,000. Not 500. They have given us 500. So it's 5,000, guys. Right. So totally 6,600. I'm going to add the current assets as well. 0, 3, 16, 17, 18, 18, 27, 2, 5. No. Something wrong. Two, 4 plus 7, 11, 34, 730. Yep. Right. Then I'm getting total assets 30, 3, 41, 330. Okay, guys, now what shall we do? Current liabilities, yeah? Which one would we start with? Accounts payable, yep. Accounts payable, how much is it? 7,000, 7,580. Right. Probably I would assume that we have current liability portion of the loan. Yeah, but before that we'll go through the liability section. Yeah, that's it basically. Loan is repayable installment 500 per month, meaning how much per year? 6,000. Yes, 500 times 12, 6,000. So loan what is it? NEB, yes? 6,000. That's it, guys. So then we'll add it 13,580. Right, the non-current liabilities, loan, NEB. Okay, tell me how much the non-current liability for the loan?
3,000.
3,000. Yes, 3,000. Why? So what did I check, guys? I checked the loan repayments in the financing section, right? Nothing. So that means we can record. We already from the we started with 9,000 in the opening balance sheet. Then we didn't pay. We paid nothing, and then current portion became 6,000. There was only 3,000 because there's only one item. You can write all the way in the last column.
So for 8 months they didn't pay back their loan.
Yes.
Where does the interest on loan come from?
Interest on loan is coming from is calculated on the principal amount of the loan at the beginning. Yep, makes sense. Sorry. Yeah, it's going to the income statement. Yeah. Right. Okay, guys. Owner's equity. Right. How much is the owner's equity? Go to the balance sheet. 23,910. Yes. 23,910. So we'll write owner's equity. We'll write here capital.
What about the capital that?
Contributed.
Yeah.
Yes, we are going to adjust it Panara here. 23,910. Then you are adding what is it? Capital contribution. How much was it? 3,000. Yeah. In the cash flow statement.
Can you add it directly on?
No. Usually no. At this point no. But in unit 3-4, we'll do the separately. Yes. Unit 3-4 we can, but yeah, we'll deal with that later. Yeah. Then net profit. But this one is a net loss. So that means you subtract, yes, net loss. 760. Yeah, 760. Yeah. And also, guys, one more thing. What is it? Drawings. Yes. No, we can't put brackets in the for the amounts, Harish, in both income statement and balance sheet. Drawings 1,400. Yep. Okay. So then, guys, let me subtract 0, 5, 7 for 11, 7, 6, 24, 750. Yes, correct. Then let's add it together. 0, 3, 3, and remaining 6, 11, 41, 330. Okay, guys, you good? You think you can manage this one? Yes? Okay, now what do you have to do? Yeah, now we are almost done with this revision part. What would you do then? You have to practice, yes? Okay, you have to practice. Because, remember I told you that I will give you a test. You can expect the same thing. Right? Expect the same similar thing in the test. Okay?
Well, when's the test?
Probably next week.
Actually.
No, I'm kidding. Right. Probably I'll give you. I had to do like depreciation, which I'm starting today. Then after that we'll do. After finishing that.
How much content have you finished?
How much content? Good question. Sorry.
Percentage.
Percentage wise, from unit 2, we have done like 70%, or maybe less than that. At most 70%, 65 or 70. Maybe like I would say 2/3 of the unit 1, 2 we are done. So there's one big lesson called budgeting, kind of lengthy, and after that we have to do the accounting ratios.
Ratio.
Yeah, remember ratios? No? We did some of the ratios.
Does GST payable review?
No, GST payable. What happened there, Sash? It became see, this one became a negative. Yeah, negative 150 means what did I say? I haven't written it. Yeah, GST receivable you have written. So that becomes a current asset. You were there last week, yes? Did you take down this one?
Yeah, I did.
Yeah. Now see, what does it say? If this balance is negative, it becomes a current asset. Okay, so then you have record cash. So hereafter, if you get it negative by using the formula, then record it as a current asset. Okay, guys. Right. Ratios you don't know? No.
What ratio?
Have you done working capital ratio?
Oh, that is yeah.
How many of them are there?
2, 3, 2.
3? 2? Actually 24. No, times by half.
Okay,
12.
You have to learn like 24.
Sorry?
Didn't you learn?
Yeah, I did 25. See how easy it is for you? Yeah, 24, you have 12, yeah? Okay, guys. Right, now, part G, sorry. What is it? Referring to answer to part T, explain your treatment of GST. This question, guys, a VC question. Now, some people say that, unit 1, 2 is not coming to exam as to VC. Now, see, this question is a VC question. Now, what was our treatment? Did we treat anything here? We are not doctors to give treatments, yes? Now, what treatment is this? Yes, accounting treatment. Yeah, current asset. Why is it a current asset?
Because we expect to pay.
Sorry?
Because you only pay.
Overpaid, very good. Yeah? Okay, overpaid. Is that all?
We expect to pay it off or we expect to receive it within 12
Within 12 months. You might get like out of 3, 1 mark. What is
GST payable.
this thing?
GST payable.
No, not
doesn't
payable.
What?
Not paid. Received.
GST receivable is expected to be received.
Yeah, so then, expected to?
Be received within 12 months. And
Yes. So, okay, I'll make it.
GST receivable is a current asset which is received.
Yes, now that's how you have to start. You have to say GST has been reported in the balance sheet as GST receivable under the current assets. Right? Don't write, I'll give the answer. Yeah, reason. Then, what do we do? Because it is a
current asset.
no, current asset, we said that it's reported under current asset because it's a present
Present economic resource.
controlled by the entity
Other than
as a result of past year. Now within brackets we have to give the past year. Now what are we saying here, guys? We are defining technically the current asset in terms of the GST, yes? Right? In terms of GST, right? Then what are the past years? Then within brackets what you guys said. What is it? GST being overpaid, yes? Then we received. Then close bracket. That's the basically, those are the past events. Those are the events that contributed or resulted the GST receivable, yes? Right? Then that would be expected to receive in cash or in terms of economic benefit in cash when the ATO refunds it during the next one. Shall I write it?
GST goes to the ATO, right?
Yes.
So then how are you getting a GST refund?
Because GST refund, ATO will refund you the money.
But doesn't the GST, all GST just go to the ATO?
Yeah. So that means what we overpaid is also gone to the ATO. So that's why ATO is.
But whenever you pay the GST to that business, they have to pay the ATO, right?
Yes. So indirectly, all GST one day it will eventually reach the ATO. So that means ATO is receiving one day all GST what we pay, what we overpay. So that means that's why they are refunding us.
So GST would, so the ATO will give us back all the money, all the GST that was spent?
No, not all of them. Whatever we overpay.
So if you make no GST, it's like you don't make any sales, right?
No.
They will pay you back all your.
Yes, if you don't make any sale, that means let's say you paid $100 to our suppliers in terms of the bills, inventory, everything, but we made 0 sales. That means all the sales, all the GST that we paid will be refunded.
This is only for businesses, right? No.
Yeah, only for businesses, correct. Not for us.
Is that what
Yeah,
people say?
we wish, yes.
Is that why people say they start a business for tax benefits?
Yes.
So you just guys
No. That tax is income tax. So tax benefit, when they say tax benefit, these people are starting businesses, that's not for GST, right? Mainly it's for what? Income tax. Make sense? That's why the people, purchase vehicles or some things, some assets on the business name. Why? Because then they will end up paying less tax. Mainly they focus income tax. But also there can be sometimes, in some time periods, you will make GST refunds. Make sense?
But do we need to wrap all that for 3 months?
Yes. Unfortunately, yes.
Why do you say it has the potential to use?
Yeah, that's basically that's how the what is it? The exam report says.
Don't you just say it will?
Yeah, that's fine. It's okay. It's okay. Don't worry. Because what the exam is going through is, remember, we did those things, yes. Remember there were how many parts in the definition of the asset? 3. Yes. What are those? Present economic resource, controlled by the entity. Yes, past events, and
It's expected to convert.
yes, provide future
What
connectivity.
about stating which one it is?
Sorry?
What about stating whether it's a current asset?
Yeah, regardless of current or non-current, I ask you the main features of the assets. 3.
Alright,
Whether it is current or non-current.
So that's 4 marks, right?
3 months. 3 months.
You thought it was 4.
Sorry?
You thought 4. What?
Yeah, it depends. Yeah. Basically in VC it's 3. Okay. Alright guys. All good? Any other questions?
No.
Alright, shall we start this one? Depreciation. Yeah? Depreciation, yes. What is depreciation? Have you heard it before or have you felt it? Have
Yeah.
you sensed it?
Yeah.
Yes. What is depreciation?
It's like when you buy something and over time the value depreciates.
Value of the asset. Depreciate. Okay, what is depreciation? When I say
Decrease.
depreciation, you can't use again the same term.
Decreases.
Value, sorry?
Devalue.
Yes, value decreases, devalues, depletes, whatever it is, decreases. Now in your study design, guys, before I go into the, I haven't opened anything. Before I go into the theory content, guys, I will introduce you the depreciation. So depreciation, guys, we have it in unit 4 as well, right? We have it in unit 4 as well. Okay, right. So mainly we have one method of recording it, but we have few methods of calculating the depreciation. Okay, we have few methods of calculating the depreciation. If you do depreciation or counting the unit, you will have many methods, at least 4, right? But in our study design, we have only 2. That also we have only 1 in the we have only one in the guys. The other method we are going to do in unit 4.
Is it both compound and simple, or?
Yes, that's what I was going to say. So what is it? First one, we have something called straight line method, which you already know, right? Probably you have done. I think most of you are doing general maths, or at least you have done
We're doing
in
financial in school.
financial, yes, for general maths, yeah. So at least you have done year 10 maths, so you should have done depreciation, yes, simple or straight line depreciation. There's another one called, if you are doing general maths, you know what I'm saying. It is called, what is it? Reducing balance method, yes, yeah. So in general maths, what do you call? Diminishing balance method, yes, yeah, diminishing, right? Depreciation, yes. Also there is, remember, unitary method, yes, based on number of units you produce, that's also there, but that we don't do in accounting. Okay. So basically, guys, yes, depreciation. How did you find depreciation in maths? Alright? Yeah, but in accounting, its calculation is the same thing, recording is different. So make sure you do well in depreciation. Otherwise, what will happen? You will get depression. Okay? So you don't want to get depression, yeah? Yeah. Do depreciation. Okay? Right. Okay, first of all, guys, there are some. Can we depreciate all the assets that we have? No. Only?
Cars,
Sorry?
vehicles,
Cars, vehicles. So tell me a kind of commenter for them.
Non-current assets.
Non-current assets. Can we again depreciate all the non-current assets?
no,
Then
Physical assets.
physical assets. Ah, very good. Interesting. Yes, physical assets. And
consumable ones,
consumable one. That means there are some assets that cannot be consumed. Yes, by a what?
premises.
Premises. You can't consume. You can't use the premises.
You can't use all the premises.
You can't use up the premises. Okay.
Can't deplete.
Sir,
You can't deplete.
you can't deplete buildings.
Yeah.
Yeah, you can't deplete the building issue.
You
I
can,
think the deplete.
you can remove the building, but the land will still have value.
Ah, that's the thing. Only the yes, correct. Building can be depreciated.
Yeah.
Yes, of course. Yeah, if we couldn't deplete the buildings, guys, okay. Look at the buildings what we would be having right now, like all our forefathers, grandparents had built, then we should be still using them, yes? No. What do we do? Eventually we demolish them, yes, because they get depreciated, yes.
Doesn't
Buildings,
sometimes-
yes, do get depreciated, yeah.
Doesn't sometimes removing the buildings increase the value of the property premises?
No. Yeah, premises what really increases, we call appreciation. Appreciation happens only for lands. Okay? Lands. Why? Because it has an infinite life. So basically remember that as non-current assets that we depreciate is only the ones that we have a finite life. Finite means what? Limited.
What about things that are like really rare? Like if you have like a mass-produced like vehicle or something, and then it's like one left, it becomes really rare and like
Yeah.
has some value.
Yeah, so those ones, what do we do? Those ones basically, those assets again will appreciate, right? Then, yeah, and also there are some situations where lands also get depreciated, guys. Which situations? Get depleted.
Like an earthquake or something.
Earthquake, yeah, what else? Correct, earthquake,
Damages.
sea erosion, and also, especially in Australia, what is it? Mining. They dig out everything else, then it's gone. Then, if you have seen in areas where they do mining, they have very big holes. Yeah. All right. Okay. Let's write the notes, guys. Firstly, and also, he said that like we are again depreciating only physical lands. I mean, we can depreciate others, but we don't do it in our study design. Right? Non-physical ones, we call it actually amortize. You already know if you do.
Wait,
general
What
maths. Yeah.
about inflation, where cash loses its value?
Inflation, cash,
Like it becomes worth less.
yeah, worthless. Exactly.
So is that in outside design?
Inflation, no.
Yeah.
We don't do deal with inflation.
Is that economics?
Yeah, economics. For inflation, hold on. For inflation, do we do accounts? No. For inflation also, we don't do accounts.
How that
That's why we revalue. We revalue though,
Oh.
like the opposite of appreciation. That of course we do. Like even though we don't do it in this stud design, I mean, for my VC I had it, so we appreciate it.
Isn't
So
that-
now see, the depreciation becomes an expense, right? Our value decreases, but appreciation, our value increase. Yeah.
Isn't the universal value of cash converted to gold or something? Like to-
Gold.
Like globally, to find the value of cash, it's converted to gold or something else. I don't remember what it was.
Yes, I think you can.
So
Yeah.
to find out how much an actual dollar from a country is worth, they have to convert
Yes.
all that
Yes.
stuff to gold.
Yeah, I remember that reminds me something. There was one leader in Africa, in Libya, called Gaddafi.
Oh,
Yeah, once he started he was kind of assassinated by the Western countries. US and US, France, and UK, right? Combination. So one reason was, I think he had asked for his payments for his oil in gold. Why? Because cash, of course, they can print. Yes, they can print as much as they want. As a result, he asked in gold. Yeah. That for his payment, he asked from gold. Yeah. However, guys, right? Now we'll start this depreciable assets. Refers to non-current assets. Tangible. Finite life. Sorry guys, this should have been full stop. Land. Land is a non-depreciable asset. So machinery, we have finite life so that we can depreciate, but land is infinite. Now one of you can come and say it has this many millions of the age of the planet is I don't know how many millions, maybe in millions years. Then you can say it has still finite, but it is very long time, and also it's a estimation. Yes, but as a result we don't depreciate, guys. Basically what we depreciate is what? All the man-made items, right? Man-made items. Okay. Right, next one. Fair value, guys. I think I have given you the note before, yes? Have I? No? In unit 1? No. Okay, then write it. This is the price that would have been received if it was acquired. Sorry, if it was sold. At the time it was acquired by the business. Next one, guys, market value. This is the price an asset can be sold for. Asset register. Is a document which lists down the assets that a business own, right? Date of purchase, description, acquisition cost, next one, importance of asset register. It assists planning, protects calculation of depreciation.
Could you go up? Not that bit, not like.
Done? You done? Next one, depreciation, guys. The depreciation is the allocation of the cost of a non-current asset. Over its useful life. Okay, now see guys, now when I asked you depreciation, everybody knew about depreciation, yes? Simply what is depreciation, right? Depreciation is basically as you use a particular non-current asset, right? Look at your phone, your laptop, right? As you use it, the value decreases. For example, let's say you purchase a phone for $1,000. After 1 year of use, can you sell it for 1,000? No, obviously lower than that. Yes, there are reasons for that, not necessarily depreciation, but in accounting we include them in depreciation as well. What is it? One is wear and tear. Yes, what are the reasons for depreciation? Wear and tear, right? So the spare parts will be used away, right? Used up, and then you might have scratches, damages, etc. Right? And also the other one is technological obsolescence. What is that? So new models will supersede the existing models. Then as a result, the older versions will be less in demand. Yes. Another reason why those items will decrease. But again, you can come and say, look, what about the antiques that have like higher value? Yes. Some of them, that's a special case. If they were like kind of in high demand and then limited, right, then there will be a high value. But however, reason for depreciation is that, right? Okay, so then we'll write guys depreciation expense. Now this is the depreciation that we do that we name in accounting. What is it? allocation of the cost of a non-current asset over its useful life, right? Okay, we'll see how we will do it when we calculate it. Next one, depreciation expense, guys, is the part of the cost of a non-current asset that has been incurred in the current period. Right. Depreciation can be calculated using few methods such as, what is it? Straight line method. Right. Hereafter, guys, we'll call it, we'll denote it by SLM. Okay? Straight line method. Right. Then what is the depreciation expense, guys? The part of the cost of a non-current asset that will be incurred. What do you mean by incurred?
Basically the value that is lost.
Yes, value loss, consumed away, yep, right, used away. So then basically that's the part that will be incurred during the current period, right? Okay. Then we'll go to the straight line method. I think most of you know what straight line method is, but let's write it still. That the non-current asset contributes evenly sorry, I lost one word, guys, sorry. Contributes evenly to revenue throughout its useful life. Thus, the depreciation expense will be the same amount along its useful life. Examples for the non-current asset that contributes evenly is like what? Fixtures and fittings, office furniture, etc. Okay, what is straight line method, guys? Straight line method means every period, every time period, or every year. Let's take every year. Every year, the depreciation amount is what? Same amount, right? That's why we call straight line. It's a linear thing, right? Linear, meaning straight line, yes. So it contributes same amount regardless of the year. First year same, year number 5 it's same, year number 10 same thing. Like what? Like this. Our furniture, fittings. Right? What do you mean by fittings, guys? Shop fittings, yeah. Fixtures and fittings. Yes, what you have fitted, yeah, basically fitting. Yeah, lights, yeah, maybe cupboards, correct. Like aisles or shelving, those ones are the what we call as fittings. Yep. Okay. Right. Then formula, guys. Formula. Please take down. Right here. Annual depreciation expense. Annual depreciation expense equal sign, right? Historical cost, take away residual value. divided by the useful life in years. Bless you. Okay. Right. Now, guys, you can ask me, what is this historical cost, residual value, and the useful life? Yes. So, first of all, guys, historical cost. I will give you. Actually, I have given an example. Yeah, worked example. Right. We'll do this one. Right. Now, let's say I'll ask you a simple question. Now, see. Now, remember, I have told you, I think, before. So, I don't really like formulas. Why? Why is that? You have to remember them exactly. Rather, I would figure out, I would put the logic behind it. Why? Because every formula is based on a logic, yes? That's it, simple. As long as you understand the logic, you can construct the formula at any time. Right? That's what I do. I can't remember formulas. If you ask me this formula, that formula, I don't know. But I know the logic behind that. That's it. Okay, now I'll tell you an example. Now you can see this formula, yes, historical cost, take away residual value and then useful life. I think historical cost you get it, so cost of the asset. Useful life also you get it, the lifetime of the asset. What is residual value, guys?
Current value.
Current value? No.
Leftover?
Sorry?
Leftover?
Yes, very good. It's correct. Leftover. Basically, residual value, I can give you synonyms. I think there are 3 more. Right? We can say scrap value, disposable value, right? Residual value.
Residue water, like the leftover water?
Yes, exactly. Residue, yeah. Then resaleable value. Whatever basically residual value is, guys. Don't worry. I have given a definition as I remember. Oh no, residual value I haven't given. Yep. Residual value I haven't given. Yep. So residual value means, guys, however, the value of the asset at the end of at the end of the life of the asset. Now, for example, let's say now all of you guys have phones. Let's say you purchase it for how much is the phone? What you have purchased? 1,000. Okay, 1,000. How long you think you can use it for?
5 years.
5 years. Very good. At the end of the 50 year, how much can you sell it for?
Like 200.
200? Okay, very good. Now let's do it. Right? Now, if I ask you with those information, can you tell me how much the depreciation per year is? How much, by how much it has dropped? So see, same thing here. Oh, not there. Right? Same thing here. What is it? Historical cost is how much? 1,000. Residual value is 200. Right? So that means, what is the answer? 800. Useful life is 5. 800 divided by 5, which is 160. Yeah? 160. Then how much is your depreciation expense for your phone? Right? For per year? 160. That's the expense. That's the business expense. 160. Now the thing is, you need to remember the formula.
No.
Why? You purchase something for 1,000. At the end of its life, you can sell it for 200. That means the total value you are going to depreciate is 800. That you do over 5 years time. 160. Huh?
Is it always in years?
No. Then you can calculate quarterly as well. How much is 160 quarterly? Means 40 divided by 4. Right? So if it is monthly, how much is it? 12. Yep. 12, you sure?
Very well.
No. 12, 12.50, yes?
For how many years?
No, no, not 12.50, sorry. $13, yes? So $40 for 3 months, for 1 month is how much? 13, yes? So like that, yeah, 13.33. And basically, you can calculate by dividing by whatever the time period you want, right? If it is semi-annually, quarterly, monthly, whatever, right? Then, please do it for this one, guys. Example. You want me to do it, or you can do it?
What about rate of depreciation?
Rate of depreciation, you do it. First, write the formula. You want me to do it? Right. The annual depreciation expense is how much? Is what? Historical cost, I'll write HC. Residual value RV divided by life. Right? So then, how much is it, guys? I would say, yeah, 1500, 8000, take away 500, divided by 5, yep. Right, so 7500 divided by 5 is 1500. Good. Okay, next one. Now you guys asked me how to calculate the rate of depreciation, yes? How do we do that, guys? Basically, take down here. Depreciation rate is equal to annual depreciation expense over historical cost times by 100. Okay, now according to our phone example, how much is the depreciation rate, guys?
160.
Yeah, 160, so that means
Divided by
1000 times by 100, yeah, which is 16%, yes? Okay, like that. Right.
18.75%.
Sorry?
18.75%.
18.75% for this one. Yeah. So we'll do it, guys, which is depreciation rate equals 1500 divided by 1000 times by 100. 18.75%. Now, are we going to round it? No. Rates, remember I told you to round only the values, yes, dollar values. These ones we are not going to round. Okay?
Wait, what is rate meant? Like, is it percent per year?
Yes. So that means, right, if you times this one by, okay, what is this? If you times 8000 by 18.75%, what do you get?
1500.
Sorry? 1500. Still you get 1500. Yep. Okay. Okay, guys. That's it for today.